What's up guys, Josh Olfert back with another video, and today I'm gonna tell you what's inside my investment portfolio. Time to think like an investor. So if you're new to the channel, my name is Josh. I run a wealth management firm and we help people get invested in the stock market and find financial independence. If you're interested in those sorts of things, make sure to smash that subscribe button. All I really want for Christmas is 1,000 subscribers, and we're so close. We're at like 870 or something like that. So please hit like, hit subscribe. But I want to tell you guys about my personal investment portfolio, because every day I deal with clients and I get to see their stuff and I get to access all of their particular information. And it's only fair that I should show you exactly where my money is and what I do with it. But the backstory on where this all came from for me, because I'm 25 and my trajectory's been a little different than a lot of people. I didn't go to university. I decided when I was getting towards the later years of high school that I wasn't cut out for this. It wasn't my thing. The whole like getting assigned something, the whole like here's your task for the day, wasn't working with me. So the idea of going to university and doing that all over again, and then going to get a job and working for someone else and doing all that, not as if there's anything wrong with that, but for me, I was just bad. I was bad at being told what to do. So when I came across this idea of financial independence, or you can build wealth by investing and then one day have your investments pay for your expenses, this blew my mind immediately, because I thought, okay, if I work as hard as I can in the immediate future and save up as much money as I can to invest, whether that's in real estate or in stocks or build a business, maybe I can be in a position 5 or 10 years out where I don't have to actually take tasks from someone else. I can, I don't have to be suckered into a job that I just hate doing. So for me, that was the main motivation to start investing, but it was a rocky start. Right out of high school, I started working and I started going and, work crazy, hours. I was working 60 hours a week, 70 hours a week. For some people, that's not that crazy, but I was taking every paycheck and investing it. And over the course of, let's say age 18 to I guess now, my whole and sole focus in my career was just to accumulate investments. So the road was a lot rockier than I thought. At first I thought, I'll just save up every month and eventually it'll get big enough and then I'll be set. But the reality is I started investing. And then, the goal changes. Something shiny comes up, like, this idea of maybe buying a rental property. So I built up this big investment account and I took it all out. And I put a down payment on a house that I could start to rent out. And then, okay, now my investment account's at zero, and that doesn't feel great because I like the idea of building that. So I keep contributing, keep building that up. And then this whole idea where a lot of my friends and successful people around me are starting businesses. They're not necessarily investing, they're not doing the buy the stock, they're not doing the buy the rental, they're actually building companies and they're having a lot of success doing it. So for me, it was like, okay, I got to withdraw my investments and start a business. And what I found over the last, 7 years, is that I went through this period of constantly building up an investment account and then flattening it to zero in order to pursue something else. But today I want to show you what all of that has culminated in. All of this money I've been saving and investing, and I've been preaching to everybody they need to be investing in building wealth. What has this actually transpired to for me? So I want to bring you through my balance sheet, my financial statements that are going to show you, as of December 2020, where I'm at with things. So let's take a look. Here we have my balance sheet, and let's redo that in case we don't want to use it. So this is pulled up, and I've just organized this super simply. I'm not looking at any short-term assets, but my long-term assets, things that I think about as a productive investment that might build wealth over the course of my life. First things first, market investments that are actually invested in the stock market. This is the account that I was just constantly building up and then shredding down to zero, and building up and shredding down to zero. Now in 2020, that's up to about $30,000. Is it where I want to be? Absolutely not. I would prefer for that to be higher, especially as a financial advisor who's advising people on this sort of thing, but it's on track to meet all the goals that I have for myself. Every single month, I'm adding about $500 to that investment account, and if we compound that even at a rate of return of 7.5% over the course of my career, that will be worth about $2 million at retirement age, around $2 million when I'm 65. So all of that being said, as an entrepreneur, I think of my investments more as a way to take the chips off the table. If I have a really good deal go through, or if business goes well, my investments are a place where I can have a systemized wealth creation process so that I don't have to worry about retirement. It's not about shooting for the fences or getting really rich with my investments. It's about how can I make sure that if I get canceled or if I lose my career or if something happens to me, I can still retire on time? That's what that first account is about. That's our market investments. Next is alternative investments in quotes. And if you don't know what that is, if you've seen previous videos of mine, you'll know exactly what that is. But for now, we'll pretty much avoid that one for the most part because you'll have to go watch it to see what that really is. It started off as a nice purchase, a nice little reward for myself, and then the price of the thing ballooned, and now it's creating a bit of an asset allocation problem. But moving on, next is the rental property. My rental property is assessed for about $215,000. There isn't a ton of price appreciation in the city that I live in, but that's the appraised market value as of this year. And then lastly, I have shares of Haven Wealth Management, which is the company that I solely own. It's a corporation that I own. Now, if we're going to talk about my investments, I probably want to exclude that one because it's not really... In our business, we think of the way that we sell our company at the end of our career, and it's usually in the range of 2.5 to 3 times your business's recurring revenue. It's a multiple of the recurring revenue. And for us, 3 times recurring revenue would be about $300,000. But this is pie in the sky. There's no way I could sell that tomorrow. There's a long process, so I'll probably exclude that. Total assets altogether there with that hypothetical business sale would be about $542,000. And in addition, there is some debt on my property. So the rental that I own isn't fully paid off. I have about $135,000 of property related debt on that rental property, which brings the total equity in my situation, you could say my net worth, to about $407,000, which is, I don't know, peanuts relative to a lot of people I know, even around my age, but at the same time, it could be a lot worse. So let's look at the investment statement instead of just the balance sheet. So if we look at my investments, like I said, 3 different things there: market investments, alternatives, rental property. This is what I talk about when I say I have a $140,000 investment portfolio, because a lot of YouTubers or people on the internet will say, look at my $2 million portfolio. And then it's just like $2 million of real estate and then $2 million of loans against it. You don't have equity, you just have that property value. So for me, $140,000 is what I have when I think about invested liquid wealth that is growing and is producing for me. So I'm quickly gonna dive into 2 of these in particular today, my rental property and my market investments. So first things first, my rental. Here's some of my favorite pictures, my favorite images, and my most cherished memories of owning a rental property. But anyways, the rent is about $1,700 every single month. Expenses that come off there are about $1,250, and I end up with about $450 every single month that is into my pocket from the rental property. In addition to that, it's nice because the tenants pay down your mortgage and the price of the house can actually go up over time. So it's been a good investment for me. There have been some horror stories. There's videos on my channel talking about those horror stories if you want to see them. But this is the general look at what my investment property, really looks like and what it earns me. The cash on cash return, because I put about $50,000 into this rental property between improvements and down payment and closing costs, all those things. If we look at what is the cash I put into the property versus how much do I get out every year as an investment income, it's about a 10.8, 11% cash on cash return, which means how much cash am I getting out for the cash I put in? But if we look at the notional return, what that takes into account is, well, the property goes up in value over time, right? And over time, you also have the mortgage paid down by the renter, and then in addition to that, it cash flows. So if we take all of those sources together, it's a 23.5% return, which is crazy. And the thing you have to understand is that is not compounded. When you invest in real estate, your returns don't compound unless you reinvest the cash flow, or unless you refinance the house, take the equity out and buy something new. But for me, this is one of my largest assets. It's a place that I chose to invest because it was a real property generating real value. It was something I could, for me, the primary benefit was having equity that I could leverage. When you have equity in a home, you can refinance it, take the equity out and buy another property, or you can invest in something else. So having a solid base in a real asset is something that I've always kind of wanted. And I've slowly realized that having one rental property is enough to deal with for now. We're going to prioritize other things going forward. Now, when I was talking about those market investments of $30,000, this is the breakdown on the software we use to kind of model out those portfolios and to show us versus the benchmark, which is funny because as a financial advisor, people think I'm going to show off how great our investing skills, but what you see here is that my strategy actually lagged behind the benchmark this year. And to give you a better understanding of what it is I'm actually doing, I adhere to evidence-based investing for this part of my life. I take tons of risks in my business and trying to grow that, doing content online, all these sorts of things. The system I use to build wealth with my investments, a lot of people would consider pretty vanilla. People might think, oh, do you have Bitcoin and do you have Tesla and do you have Nvidia and all these crazy stocks? In reality, I just run a system. I run an efficient ETF-based, so exchange-traded funds purely, a low-cost ETF portfolio that is just broadly diversified across the world. I don't want to get into the specifics, it would take a really long time, but I will show you a few of the ETFs that I use because I think there's a really cool concept behind some of them that you might want to learn. But anyways, all this being said, here's the portfolio, and I want to give you a taste of some of the investment strategies inside of there. So I love the idea of having a systematic strategy. Having an investment strategy where it's rules-based, and I'm not speculating and plucking little investments out of thin air, but it's more so based on evidence and history. And I want to talk about two of the funds that I have and why I chose to own them and how it really shows my philosophy. So the first thing to look at here is the Vanguard Global Value Factor ETF. So that's a lot of words, it's a mouthful. But this is managed by Vanguard's quantitative equity group. And what quantitative means is it's rules-based. They're scanning the entire world or whatever market they choose for certain aspects of a company. For instance, is it a cheap company, or does it have a lot of momentum, or does it have very low volatility, or is it a small cap company? There's certain factors that tend to outperform others over time. So this right here is one of the funds I own and gives you a good idea of what this really means. So this is a perfect example of how an investment strategy runs. It even shows us right in their fun facts document what it is that they do. So first thing that they do here is they define what market they're going to pull from. So this investment strategy looks at the Russell 3000, which is a huge index of 3,000 companies. And what it does is it pinpoints all of the different companies. It runs it through a massive computer model with all the data. And it shows which companies out of that entire universe are the lowest on price to book ratio, are the lowest on price to forward earnings ratio, or the lowest to price to cash flow. We're using metrics that usually predict business success, and we're scanning the entire market, looking for the ones that rank the best in that metric. So you're looking at the whole universe, you're picking out a few characteristics you want your stocks to show, and then it rank orders them. And then it's just a process of rebalancing, and every month trying to figure out what are the new stocks that are the best value. So that is one of my favorite strategies. It's called quantitative and systematic. You're not going to see a ton of stocks in my portfolio. Will I get back into trading and speculating? It's possible, but for me, it's almost become monotonous and boring to do that because I would rather invest my time and energy in looking at increasing my income or buying more property or something like that rather than trying to spend my days speculating on specific stocks. So what are some of the companies that we would see in here, for instance? Well, you see a lot of boring companies because what this is we're looking at value stocks, companies that are undervalued. So we have things like FedEx and Verizon, AT&T, Comcast, companies that are probably more boring than things you tend to hear about when investing. But that's where the other side of the strategy comes in, which is the same idea, a factor strategy, but focusing on momentum instead. Instead of looking at value, we're looking at which companies are growing the fastest. And the exact same process is used here. And what ends up happening is, because this one is more so focused on momentum, which stocks have done really, really well recently, we see all the big names that everybody's excited about. We see Apple and Tesla and AMD and Nvidia and PayPal and Square and these kinds of companies, right? So that gives you an idea of the kind of thought that goes into a portfolio that I would build for myself. I want it to be systematic. I want it to be evidence-based. Anyways, guys, that's a look at my portfolio and the capital that I have invested productively. I would say if there's anything I learned, it's that investing is a rocky process. It's messy. It's not just this beautiful compound interest curve. Things are going to attract you and you're going to want to jump on them. There's going to be a new shiny thing like Bitcoin or some new thing that you want to throw all your money into. And what that does is it just always resets your compounding. So for me, if there was one thing I would have done, it would have been respect building the base. You want to respect building that base of investments so that you can compound forever instead of jumping from thing to thing to thing. But anyways, guys, I appreciate you so much for watching this video. Hopefully you got some insight from the way that I invest. It isn't perfect. I think that if there were some adjustments I would make, I would have less allocated to alternatives and I would invest probably more in the market. But for me, like I said, the best way for me to invest is in the place that's going to give me the best shot at having financial independence as efficiently as possible. And for me, that's increasing my income, that's building my business, and those sorts of things. So anyways, thank you so much for watching this video. If you like this video, you would love to see the ones I mentioned where I talk about my alternative investment gone wrong or my rental properties that also had some issues themselves. And lastly, if you enjoyed this video, remember hit like, subscribe, and turn on post notifications for more videos just like this one every single week. Until next time.